Hey guys, what's going on? Welcome back to my channel. As our weekend routine, let's start the weekly outlook for Eurodollar, gold, and NAS 100. So let's start with Eurodollar. As you could see on my screen, we had a bearish break of structure, and in the last week, we had another bearish break of structure. We can safely say that our ERL has been taken out on the weekly time frame, and our medium term view should be that we should see a retracement now towards this IRL, which is the weekly fair value gap. Now the question to answer is that will this retracement be immediate, or will this retracement will be after a next leg of further sell off? So let's go and check out the daily time frame. So on the daily time frame, you'd see that our swing structure is bearish. Price had mitigated this DFVG on Friday and it had given a bearish close, as you would see in this markup. Now there could be two scenarios. First scenario is that price continues to head up. If it goes to head up, fine, we would get better places to short from this weekly fair value gap, which is also the internal range liquidity of our higher time frame. Now the other scenario could be, since we got a bearish close on the daily time frame, we could see a potential liquidation of the sell side liquidity before a reversal towards the weekly internal range liquidity, which is the fair value gaps that you see here. Now let's go and check out the H4 time frame. So on the H4 time frame, you see, combining it with the daily time frame, what we can see is that we had a bearish break of structure. Price probably mitigated the premium area and has given a bearish initiation, and there was this sell side liquidity engineered. So we could potentially see that in the next week we could have this liquidation of sell side liquidity followed by a reversal towards this weekly fair value gap, which is the internal range liquidity. So very simple outlook on euro dollar. Now let's go and check out on gold. So on gold, it's slightly complex, but hear me very carefully. You'll probably understand what I'm trying to say. So in the weekly structural leg, you see that the ERL has been taken out, but in the immediate structural leg, there is no FVG. So now the question is, there is this major buy side liquidity plus WFVG confluence here, and then there's a major sell side liquidity plus WFVG confluence here. Now where would price go? I don't know. Let's go and check out on the lower time frame what price is most likely going to do. If you look at the daily time frame on gold, we had a bearish break of structure, so ERL taken out. Now what should price do? It should take out the internal range liquidity. It has taken out the immediate daily fair value gap. However, there is one daily fair value gap which is a high probability area to look for short entries. So most likely this internal range liquidity or the DFVG is the place where I expect price to go in the next week. Now what can happen? Price can potentially reverse from here also. To find this, let's go and check out the H4 time frame. So on H4 time frame, if you look at this entire swing leg from here to here, price has mitigated the premium area, right? So now we're not looking for longs anymore. Now what are the potential two scenarios in which we can expect to look for short entries? First is the best case scenario, price mitigates higher, mitigates this confluence of H4 FVG plus DFVG plus premium zone, the best area to look for shorts. If price has to return right from this DFVG, we should see price doing that first. So what we can expect is, if price reverses this H4 FVG and creates an inverse H4 FVG, then we can look for shorts. Otherwise, we need to wait for price to mitigate these areas and then get a bearish break of structure to understand that yes, this swing pullback is over and now we can look for shorts. So clear? This is the outlook on gold now. Now let's go and check out NAS 100, which is my favorite setup for next week. It's super easy and it's right there. So if you look at the weekly time frame on NAS, our swing structure was bullish. We have this wide range of weekly fair value gaps. So we can expect price to come down to the weekly fair value gaps. This is a major weekly sell side liquidity plus WFG confluence. So watch out for this area to be taken out in the coming week, hopefully. And also the other thing that convinces me that this sell side liquidity is the next DOL is because price failed to commit to a new high, right? Once it swept this initial fair value gap and gave a bullish initiation. So if you remember, our last week's outlook was price should most likely take out this BSLQ, but probably it is leaving behind for future purposes, and first it wants to take out the sell side liquidity, come somewhere here and then give us a bullish reaction. Now let's go and check out the daily time frame. So if we combine the weekly with the daily, How do we read daily is that we had a bullish break of structure, then we had a bearish break of structure. Price mitigated the premium, gave a bearish initiation. Price mitigated the DFVG, gave another bearish initiation. So price is actually telling us that it is towards the sell side. So NAS is screaming sell me. So we should not be looking at longs in NAS because the structure and the analysis is right here, which screams sells on NAS. Now let's go and check out the H4 time frame. So if you remember this DFVG, we had a bearish shift in structure in the immediate order flow, and then we had a one more bearish break of structure here. Price mitigated the premium, mitigated this H4 order block, which is the CISID area, and gave another bearish reaction. There is this sell side liquidity, there is this sell side liquidity. So what does it scream again? For every pullback, NAS 100 is going to be a sell on rise market. So this is the outlook for NAS. So this concludes our weekly outlook for the week. Let me know in case you have any questions or comments in the comment section. And until then, I wish you a wonderful week ahead. Cheers and thank you.